Hey, what's up? This is Brian Kuzmar from Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Another absolutely stunning, beautifully day. Look at that ocean. If you're one of those people that gets seasick, this is the perfect day to go out with your friend boating because there is not a single wave out there. It looks like a lake, actually. Anyone that's grown up on a lake before, it looks like a lake. Anyways, beautiful day out there. Oh, one other thing. If you notice, our days are getting shorter and shorter. It's getting darker earlier, and it stays darker later in the morning. And exactly what is that? That's the winter solstice, which is part of our holidays. If you don't know what that is, some people do, some people don't. That is the day when we have the shortest day of the year. I think it changes back to the longest day. And when is that? That is going to be December 21st at 10:03. Is that 10:03 a.m.? I guess it is. But anyway, this is going to be the shortest day of the year as far as sunlight goes. After that, it's smooth sailing. We get our days longer and longer again. So, not many of you know that, but coming up soon is the winter solstice. Solstice. Sorry, I don't know if I pronounced that correctly. My father's been talking about it for years and years, and I just figured I'd mention it here. Global stocks hit an all-time high and stimulus optimism ahead of the Fed meeting. Well, no, it doesn't surprise me really, because that's all that's been fueling the stock market is cheap money that super rich people's individuals or corporations can get at extremely low interest rates. And what do they want to do when they get that money? Because they can borrow, unlimited amounts depending on their credit history. What do they want to do with that money? They want to invest it. They want to make more money with it. So what do? They go look for places to put the money for any kind of yield, even a small yield that's above what they have to pay in interest to get it. So really all that's fueling the stock market, the bond market, and really the entire country is cheap fiat currency, cheap money, and they keep cranking it out more and more and more. We're not the world's reserve currency. We are still, but becoming less and less so on a daily basis, because the rest of the world is looking at us and saying, hey, you guys are taking the dollar that we use and trade with you and everyone else, and you're making that dollar cheaper and cheaper and cheaper. We have to use more dollars to buy the same product we did for a year or two ago. So they're not going to be happy with that, and that's why they're doing direct swaps with each other. They're bypassing the dollar. And also the United States, over the last, I think, 10, 15, 20 years, we've weaponized the dollar. The dollar was supposed to be like, all right, even our enemies could use the dollar. We wouldn't want them to. We'd try to block them off, but we wouldn't punish a country like we've done with Russia and people that we're not at war with. We wouldn't punish them because they didn't do what we said. And that's what the United States has been doing with the U.S. dollar, is we've been punishing other countries, saying, listen, if you don't do what we want you to do, we're going to screw your economy terribly. So other countries, and countries that haven't had an argument with the United States, look at this and go, listen, if they'll do it to them, they'll do it to us. So really, why do we want to use the U.S. dollar as a world reserve currency if they can use it against us as a weapon? So they've all been divesting. Even our countries that are friends of ours have to look at this and say, they could do that to us one day if we don't do something they want. They could weaponize their dollar and cause us great economic damage. So the entire world is getting off the U.S. dollar. And what does this mean? That all these dollars are going to come back to us, and we are going to suffer the worst. So remember that when the Fed just keeps printing out this fiat currency over and over and over. Anyway, got a little bit, I digressed there just a little bit, but this is why stock markets are up. It's not because any of these companies are making a superb product. You remember back when, who was it, that iced tea company came out of nowhere and their stock got huge. Why? Because they made a great product. Everybody bought it, and people bought the stock because the product was profitable and selling. Well, that's no more. The only reason most stocks are trading and getting higher and higher is just be people loading money into it, investors loading money into it, looking for a return, especially those that have cheap borrowed money. So this is exactly what's fueling global stocks. And the stimulus is another part of that too. The stimulus fuels all these Robin Hooders, these day traders that are unemployed. When they get a stimulus check, they're sitting at home like gamers, injecting billions of dollars into the market. So stocks are getting the benefit of that as well, the stimulus money, besides getting cheap money from the Fed. Let's move along from there because I think you understand that. Good article. You can read this. Global stocks at all-time high and stimulus optimism ahead of the Fed meeting. Let's move along to the next article here. And what spending slowdown? Credit cards, debt cards show roaring retail sales. Well, I want to show you something. This is on Zero Hedge. It's kind of two contradicting reports. And it's kind of a bit strange here, but I want to point this out because I think I kind of know what's happening here. Spending slowdown. What spending slowdown is basically what he's saying here. Credit cards and debt cards are soaring, and basically what Bank of America is saying is that people are just running up the limits on their cards, running them up. They're spending their money, and I think Bank of America is assuming that this is retail sales because it does happen at retail operations like grocery stores and Target and Walmart and these kind of places. However, what are they buying? That's the question, and why? And I want to point this article out. Same day, ready? U.S. retail sales disappoint, tumble most since April. Now we're in the holiday season, folks. The prior article just said that the credit cards are just soaring, that people are using up their credit cards. This right here says U.S. retail sales disappoint. I think what we're seeing here is that like retail sales for televisions, retail sales for gifts, retail sales for things that we don't need are down right now dramatically. Those kind of retail sales are going to suffer. Maybe phones, maybe gaming consoles. We're in a bad economy with 20 plus million people unemployed. So a lot of people aren't going to go out and spend on a credit card and buy those kind of things. But what are they buying? Maybe the increase in the credit card usage is food, basic necessities, cash advances to pay for your rent. There's a lot of things here that suggest that the credit cards are being used to survive, not to buy gifts or retail-y type things or televisions. That's kind of the way I'm reading this. Tell me what you think in the comments below. Let's move along to the next thing because I don't want to make this too long. I like this article. This gentleman was comparing a strong dollar to the stock market. Remember how I've been talking for the last 6 months that I've seen kind of like an inverse relationship with gold and the dollar. When the dollar kind of spikes, gold gets whacked a little bit, and vice versa. When the dollar gets whacked, gold. Well, this gentleman also shows an inverse relationship with the stock market. It's kind of funny. The first time I read this. And he says here that despite a strongly declining dollar, and I think we have this in common with the stock market, us gold people and silver people, this could point to a lessening efficacy in seeing the dollar decline, aiding equities, which suggests not only a divergence forming, but also suggests a sudden resurgence in, here it is, suggests that a sudden resurgence in the dollar could end up pressuring equities more, perhaps currently expected, given presumed positive year-end seasonality. So he's saying that he's expecting some dollar strength here to pop up here maybe before the end of the year, which will knock equities markets down. And this is exactly what I've been saying with gold and silver. I think we could see dollar strength could knock precious metals down before the end of the year. And of course, I always say that they definitely monkey hammer around holidays when the trading is real slow. So if the dollar spikes at that time and this gentleman says it's going to affect equities, but I know, and I've been talking for months, that it does have an effect on gold. So if the dollar spikes during slow holiday trading with gold, silver, and precious metals right before the holidays, you'll see precious metals get knocked real quick. But again, as I've been saying, it provides a great buying opportunity. Don't sell into that market. Don't get fearful. We're in a long-term bull market here. You're going to do well by buying the dips. I'm going to move along, but I'm going to show you the top of this article here. And I believe that's the gentleman that wrote it right there. I'm not even going to try to pronounce it. Sven Henrich. There it is. Okay, I pronounced it, I think. Dollar up, markets down, vice versa. It's kind of funny. Where risk lurks unnoticed. Authored by Sven from northmantrader.com. I've read some of his articles, actually, northmantrader.com, and that's what he's talking about there. By the way, Zero Hedge, if you notice, they don't write all their own articles. It's basically like a hub, so you can go to different blogs and different people. You know, they even have articles on Wall Street Journal, so there's a misconception that it's one person that writes all the articles for Zero Hedge. It's actually a news hub, kind of. So anyway, there is the actual link to that article, Northman Trader, Dollar Watch. I'm going to move on to the next thing here. Bitcoin, oh my God, reaches a new record high, tops 20,000 for the first time. Man, that is just crazy. It's like, well, it's all that money piling into it. I can't, you know, the young generation, this younger generation, you know, even young kids in their 20s and 30s, I got like a 0.3 Bitcoin or 0.2 Bitcoin, or I managed to make a couple grand. I think that's wonderful. I think that the fact that they're making money on Bitcoin shows entrepreneurship and good trading skills if they're actually able to trade and sell at the highs and when it falls back, buy back in. Any people doing that with cryptocurrencies are my heroes because, that's what capitalism is all about, taking advantage of these things. However, do not forget what crypto coin really is. It is not money. It is a fiat kind of money. It's fiat currency. It's not really money, and the volatility of it certainly makes it not appealing as money. It makes it appealing as an investment, but not as money for a vast majority of Americans and people all over the world. It is not money. It looks like an investment. It even looks like an investment to me if you know what you're doing. However, the problem with this Bitcoin investment is that it's an unregulated market. And what does that say? That says that there's a couple issues. First off, big whales can get in there, pump the market up, and just drop all the little guys and create mass havoc and losses of money that are huge. The other thing is that unregulated like this, governments don't like competition, and most of all, even bigger and more important than governments is bankers. They run the world. Bankers don't like competition, and they don't like crypto, and they've been talking about banning it. China's already banned it. A few other countries have already banned it. Other countries are either going to do three things. They're going to ban it, or they're going to regulate it heavily, or they're going to ban it and create their own cryptocurrencies. So those are the three options that I see. And as I said, remember, cryptocurrency is backed by zero, nothing. It's not backed by a cow. It's not backed by a steak. It's not backed by a car. It's not backed by a piece of land. It's not backed by gold. Nothing tangible. It is just ones and zeros, and a good way to trade peer-to-peer if you need to pay someone cash or something like that and trade it for U.S. dollars, which is a fiat currency. But remember, it is not money. Not like gold. Gold's been around for 5,000 years, and here's the key word that Bitcoin can never say, or the U.S. dollar can't say anymore since 1972. It's the word tangible. Okay, good article. Read that too. I like it, but more or less the headline says everything there. And as I said, and I want to remind you, Bitcoin is a fiat currency backed by nothing. Don't forget that. If you're out there making money and you're investing in it and you're doing well, man, like I said, you're my hero. Maybe you can come in and teach me some things, and I'll trade you some skills on gold. So that's really about it. This is Brian Kuzmar with, cripes. I forgot to talk about the most important thing here. Sorry about that. Let me refresh this page, which is precious metals, which are up today. 1857. Again, I thought we were going to trade in this 1830 to 1870 range for the rest of the month. Tough to say. I didn't really, that's a wide range too, my apology, but it's been a tough month or two to figure this out. Too many uncertainties with elections and the dollar flopping around and the holiday season coming up where I think it's going to get monkey hammered. And if it doesn't get monkey hammered, it'll go the opposite direction. It'll just take off. And silver acting wild and crazy again. Gold up a little bit, $4 or so, $5, and silver up a half a buck. And platinum down. I said platinum is just completely decoupled from the price of gold completely in the last 2 weeks ago or 3 weeks ago. However, I still love it. I still think it's a great metal. I still think it's cheap at these prices. So I like it. Same with silver. I think silver is still cheap. I think gold is still cheap. I think all these metals are cheap, even if you buy them at the high this year, or you buy them at the high. If you bought in, you're paid over $2,000 for gold. relax, relax, relax. If you can buy these dips, cost average down, fine. But if you can't, relax. Your day will come. Don't panic. Don't sell. Same thing with silver. If you bought up near the high, 30 bucks an ounce, relax. Don't panic. Don't sell. Buy the dips if you can. And same thing with platinum. Although platinum hasn't had many big dips, it's kind of on its own at this point. Well, I think I can end this report right now. This is my, I didn't even say what day it was, December 16th. This is Wednesday, this report. And what's the best products out there right now? Still Krugerrands, believe it or not, still have the cheapest premium. However, there are some other products that kind of pop up in your local coin shops once in a while. You can ask them about that are cheaper than Krugerrands. But across the board, I think across the world, KRs is still the cheapest product. US 90% silver coin is the cheapest way to buy silver. If not, I still think 1 ounce and 10 ounce and 100 ounce generic bars are the next cheapest way to buy it. Canadian maples and silver eagles, ooh, expensive. Too expensive for my taste. Personally, me, my family, and my friends, I put them in a generic stuff, or 90%. Anyways, oh, I did say anyways. Sorry about that. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call us anytime at 954-493-8811 for live quotes or what the best products are, or any questions that I haven't answered with my videos below or in my past videos. Feel free to give me a call, and you can even ask me in comments down here. Happy to do that if you don't live in my area. But if you do live in my area, come on in or give me a call. Happy to answer any questions you have. And if you don't live in my area, please, as I've always said, find a local precious metal dealer and coin dealer or coin dealer to do your business. Keep your money local. I don't advise going online to buy gold and silver, not because they're bad people or anything, just because I advise keeping the money local in your neighborhood, in your local area. And you'd be surprised if you just take a little bit of time to look in your local area. You might very well find a good dealer that's going to be just as cheap as the online guys. I encourage you to go look first before you go online to buy. Well, that's it. Thanks for watching. If anything really crazy happens today, I'll do a second video. If not, I'll talk to you tomorrow. And again, thanks for watching. If it's your first time, please hit the subscribe button, and talk to you soon.